Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex swing trading, using the TC2000 platform. Hello, this is the weekend review for the 21 Forex currencies in the week ending 17 July, and I'd like to start off with the Aussie Dollar, Canadian Dollar. But first, what I'd like to do is orient you to the four charts. Over here at the top right, I have the daily Heikin Ashi, which is just the average price action for the day that is calculated. These candles are different from the normal and actual price candles that are calculated in the chart below it. Heikin Ashi in Japanese just means average price. What this does is it allows me to filter out the noise between the ups and the downs of actual price action and show the general momentum of price going throughout each day. Off to the left here, I have the Heikin Ashi weekly candles, so I see the weekly momentum for the currency along with the season, and this is represented by the multicolored RL10. And down here is the regular price action candles for the week. So I get to see in this quad chart, I get to see actual price action, Heikin Ashi price action on the daily time frames, and Heikin Ashi weekly and actual price action on the weekly time frames. And there are three approaches that I use for this particular system. Using the Ken Long's Bollinger Band regression line system, I have three types of approaches. One is the two candle rule, and hat tip to Rick Wise and Danny for programming the bias that's in alignment with the weekly bias that's in alignment with the daily bias. And when I get one of the conditions of two green candles north of the RL10 in alignment with the bias both at the weekly and the daily, it comes up with a check mark here. And so this tells me there are two green candles north of the RL10. It's in the summer on the daily. It's also in the summer on the weekly Heikin Ashi. We're in normal range of its average true range. Quiet means it's a sideways quiet channel, or consolidating, or it's in a volatile range. Meaning, so when I set up for the week, I check and look for two green candles in the lower right hand quadrant here, two green candles north of the RL10 to consider going long. In this case, the second green candle was on a Friday. So on Sunday afternoon, if it had not when the Forex opens up again, if the price has not gapped up or down any one direction, I may go long for this particular currency just because it has its indication here. But I don't want to run the risk of keeping this trade open over the weekend in case it goes down or up. In case we don't know what it would gap up. I try to avoid black swan events with gaps up and gaps down during Forex trading. So I don't keep any of my trades open during the weekend. The second approach that I use is in this system is the weekly high and low frog box. Right, so in this case, if both the Heikin Ashi are up and the RL10 is sloping up, and we're in this summer season as it is indicated here, I have a weekly high buy or long orders placed at the weekly high, and I also have long orders placed at the weekly low. And I go nothing but longs for this particular currency. And as you can see here, we had an initial long here, another order here, and was stopped out here. I try to stay one indicator below as soon as it breaks one of the, as soon as it activates one of the long positions. So I had it at the belly of the dragon, moved it up, and we were stopped out at the edge of the floodplain. Now, this right here is my third approach. Because of the fact that all indications are for the long side. Any break above the daily candle on there on my daily frog box internal to the week is an immediate long. So this is where I got that initial position, followed by the second position, and out at the third. Now you could go back in as soon as it comes back in and replace another order at the weekly high in order to do that game. I did not in this case. Those are the three types of approaches that I do in order to determine when all price action is to the upside, do it. Now if I have conflicting signals on the weekly, like in this case, Heikin Ashi is down, the slope of the RL10 is down, we're still in the spring, there's no sign of bias for this particular thing. I keep the weekly high long, and I keep the weekly low short, right? So in this case, what I did, as soon as it goes short, you can do a counter trend trade in case it goes back against you, meaning you can have a stop and a long order here at the base of this particular candle when you're trading the long, which means, like it happened in this case, if you have a stop for the short here because it broke the weekly low, and you have a weekly long order that's right above it in case it goes against you, that means momentum is not going to the downside. And as it did in here, it shot up and went through the weekly high, and we moved the stop up here to gauge this profit. Now as it comes crashing back down, there are no short orders until we get back down to here, because there's conflicting bias here to the downside. We have a spring season, we have no red check mark for a short, right? So this, and I don't do daily frog boxes within there when I got conflicting signals like this up here for the CAD and Swiss franc. So to reiterate, to emphasize the weekend review, we had initial longs that hit our deal. Remember, only going long in this instance, right? So in this case, we were stopped out on the initial one. We got a buy order here at the long, shot all the way up, and this particular, and hit our Z3 target. It's led for a very good trade on this particular one. Now this was initial daily frog. I moved it up since it moved past the river, and I got this initial profit. But this trade right here was a monster. This one was a very good trade on to the long side, in alignment with the season and the Heikin-Ashi. Aussie dollar, Japanese yen, same thing. This was our daily. I didn't move the stop fast enough, but I wasn't stopped out at this point until I moved the stop here as soon as it triggered this. So the difference between here and here, and then it came back and stopped me out here. So I got about break even plus dinner for two on this one. This is what you have to gauge when you have multiple orders, but you could have an order here too as well, which I didn't take because we can have second and third positions. Because it was so close to the weekly high, I didn't do that, but we can have second and third positions at these swing highs of the RL10. Zealand Japanese yen, again conflicting signals, and so right now I use the 2 candle rule in this case because we were in the summer. Went ahead, 2 green candles north of the RL10. Didn't activate a short, but here it activated a long. Went through up here, and then for a nice gain was stopped out just below. I think I moved it to the 30 moving day average. Aussie dollar, US dollar, again, nothing but longs, right? So initial order in, we were in 2 orders because I did take this RL10 high. So I got this plus this one for a nice long. It went up here for a third order and then was stopped out. Canadian dollar, Swiss franc, we just went over. Canadian dollar, Japanese yen. We have conflicting signals. We have 2 green candles north of the RL10, and we were stopped out. This was held at the belly of the dragon. Swiss franc, Japanese yen, nothing but green. So we had an initial long order. We were stopped out here at the edge of the river. As soon as it got past the hump of the dragon, came right back up. We're in a buyer order. When I was down, I went ahead and moved it up to break even plus dinner for 2 as it shot right up through there. It was right here on the initial change of the candle. Came back down, stopped us out, and then shot right back up. But we did get a nice break even plus dinner for 2. So 2 gains on this particular currency. Here our Aussie dollar, nothing but shorts. Initial trade was stopped out. Initial short on the weekly high was also stopped out at the PSAR. We had it here at the edge of the river and didn't trade this further after that. Euro Canadian dollar we did not trade, but we see a potential breakout going. We had 2 green candles north of the RL10, went ahead and broke all the way up and hit the Z3. So if you decided to take this trade, 2 green candles north of the RL10, you could have had a significant gain on the Z3 as a potential target. I didn't because it was still in consolidation. I think it's about ready to break out because this looks like a potential catapult. We'll see if it continues to break out after this. Well, that was one of my initial findings because we weren't in a super pinch. We were getting close to a pinch, but since the 200 moving day average was south of the entire pinch, the bias should have been to the long side. Euro Swiss franc, we had a long and no real direction at this point, but we had a long. So as soon as we hit this, we hit our Z3 target. This was a phenomenal trade on the Euro Swiss franc. So went up here, hit our Z3 excursion, and then came right back down. So hit our target exactly where we wanted it to close out. Euro Japanese yen, nothing but green. So I had an initial long order, continued to go up, and up, and then I was in 1, 2, 3 orders and was stopped out just short of the third order because it went past the edge of the floodplain. Came back and stopped me out. That was a very good trade. We have 2 green candles north of the RL10 for next week, something we need to consider. Euro New Zealand dollar, nothing but shorts, and so as you move up this, we needed to see some kind of continued price action to the short side. But as you see on actual price action compared to the Heikin-Ashi, look at this, it was a tweezer effect. So we had one down candle with a catapult tweezer, and then the shooting star in between, and then a long bullish candle on the other side. They call that a tweezer. So this one in, we had our initial short at the weekly high activated, and we were stopped out at PSAR. Euro New Zealand dollar, nothing but longs. This was a fantastic trade. We had 2 orders. In initial daily frog activated, then the weekly high activated, the weekly frog, and then hit the Z3 excursion. I found that the wider the Z3, as far as its excursion to the downside or upside, the stronger the resistance. And as you can see here, this is exactly where price action stopped. So this was a good target for us and a good trade. Zealand Canadian dollar, nothing but longs, as we had here. Had long order, no trade on the New Zealand Canadian dollar. Did not hit the price one way or the other. So I had my initial trade here. For the New Zealand Canadian dollar, initially moved our stop for the daily frog here, went up. I went ahead and moved it to, because it went up another indicator, and as soon as it got above this, I moved it right to the base of this candle. I thought it was going to be a down candle, hammer, and then another up candle. Didn't do that, stopped me out for a small loss on the Zealand Canadian dollar. Zealand Swiss franc, nothing but longs, and so this initially hit a long, then we were stopped out of that trade, hit the low of this, and then was initially stopped out here at the hump of the dragon as it went past the weekly high. So this initial trade was a loss, and then this trade was a gain. Zealand Japanese yen, nothing but longs. We were activated here, and then I moved the stop up to the RL90 for a gain. Came back down, activated our long order down at the weekly low, came back up, and got this for a long too. So nice gain on the counter trend trades. Alright, nice gain on the bounce or the reversal and the breakout. Zealand US dollar, initial nothing but longs. Initial trade was a loss in the daily. Went ahead and activated the long here because we had longs at the weekly low and the weekly high. Went up and was stopped out here, right here at the base of the belly of the dragon for a nice gain. US Canadian dollar had initial short, went down all the way to the edge of the river, moved it down to break even plus dinner for 2 at the 200 because I was concerned about the stop hunting by the large banks. Went back up, was stopped out for a small gain, activated a short at the weekly high, came all the way down where I was at the edge of the river for the stop, one indicator down, and then was initially stopped out. I had a second order here at the swing low of this RL10. So I had 1 order and 2 orders and was stopped out here for a nice gain. US dollar Swiss franc, nothing but shorts. Initial short was a loss when we moved it down to, on the daily frog, to the edge of the river, and back up, activated another short, came down for a nice gain at the edge of the river. US dollar Japanese yen had 2 candles north of the RL10, initially stopped out at the belly of the dragon, and that was the only trade that was activated. Well folks, that's all I have for the weekend review. I'm going to go ahead and do another special video on how to use this momentum scan for your stocks, indexes, for both the S&P 500, the Dow Jones 30, NASDAQ 100. And I think you'll be interested to see some of the momentum. We are conducting a Forex boot camp and a Forex intermediate course. If you're interested, click on the link below. And remember, ruthless risk management. Have a great weekend, everyone. Well, if you like this video, go ahead and hit the like button below. and the subscribe button. And if you want more information on TC2000, I have an affiliate link below. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.